what I was talking to them about was, ensuring that their real estate agents refer their clients to a broker, a mortgage broker or agent, because a lot of the times the clients will, if they sign up at the bank, those posted rates are going to hurt them. And trying to get out of that and trying to make a change, especially as a lender, I would see them falling short because they were not expecting that size of a penalty. Sometimes they needed a gift letter from their parents at 40 because nobody was expecting a $27,000 penalty.
Yeah.
So I just say mortgage agents and brokers will help navigate that. And when that happens, you also lose opportunity. Agents in, helping people get to that next stage.
It's true.
Not everybody's prepared to pay a $27,000 penalty.
No, because they're also not used to these numbers being so high. Right. I think the last time I seen, probably 2001, 2002. Was it? Was that the time? And then everything kind of.
The 2008 was the credit crunch.
Yeah.
So we went through that, and then 2000 and was it 18? I think it was 18. The stress test.
Yeah.
That also gave us very, all of a sudden in both of those years. And then there was the recession that I lived through. I had first started in the industry. I was 22 years old in the early 90s, late 80s, early 90s, when that hard recession hit.
Yeah.
People were walking and dropping their keys off. But definitely the credit crunch and definitely the stress tests were 2 years that business went right down on. So
I'm remembering, I haven't been doing it as long as you, but I'm remembering when I was I was actually still working in banking at that time, and rates were at I'm gonna say probably high fives,
right?
High fives, low sixes, and then really started to come down,
right?
And people were trying to get into these lower interest rate products, and this is when we start having to have the conversations about interest rate differential and, why are penalties so high? Course. And, that education piece in itself was...
It's hugely, to me, people say, okay, well, it's either 3 months or the interest differential. Interest differential of what?
Exactly.
Of the 3-year bond, the 5-year bond, a prime rate, your own prime rate, because some banks have their own prime rate, of posted rate, of... Interest differential is an incomplete sentence.
Yeah, exactly.
And that's what people don't know. And a lot of people think every bank calculates or every lender calculates penalties the same way.
Yeah.
No, they don't.
No, they do not.
Right. It's, as long as you're not going past usury, you can do whatever you want.
Yeah.
Because you sign the standard charge terms.
It tells you. Did you read it? Did your lawyer take you through it?
Right. And I've said to lots of people, there's 2 rates on a mortgage, the rate you're going to get going in and the rate you're going to get going out.
It's the one the one that they charge you on the way out that really matters.
Right. So, when somebody says to me now, oh, I've got a great rate, I have about 10 more questions. Then I'll tell you if you have a great rate.
Exactly.
Right. It's like the rate's the attraction. The contract's the personality.
Now that is education with Doreen Walsh.
That's right.